positive takeaways coming in from Tata Motors analyst meet. In fact, they have gone ahead and reiterated a better profitability outlook as well as improved free cash flow generation. They have reiterated the target to achieve near zero debt levels by FY24. In the CV business, they expect to maintain leadership and improved structural margins. Turnaround in the CV business is likely to be led by demand revival, better pricing strategy, as well as structural cost reduction measures that they have undertaken. Management expects the overall CV industry, which is both the medium heavy commercial vehicles as well as the light commercial vehicles volume, to grow anywhere between 36 to 38% in FY22. They plan to achieve a double-digit EBITDA margin as well as positive free cash flow through the cycle. In the passenger vehicle business, they have guided for an EBITDA margin in high single digits over the next 3 years, and free cash flow is likely to break even in FY23, and it is likely to be positive thereafter. They expect to maintain leadership in the evolving segment of electric vehicles, and they do plan to launch more models in the same. Management also indicated that the turnaround in the passenger vehicles has been driven by a renewed focus on brands and new product introductions with segment leading features in order to drive a better mix. Tata Motors also has significantly improved its front-end processes related to sales and services and overhaul its network identity. The PV segment EBITDA margin has turned positive, driven by a combination of significantly higher volumes and a better mix as well. And they expect further improvement in the mix due to the SUV launches, which is also likely to further strengthen the margins. CLSA has gone ahead and hiked the target price from Rs 345 per share to Rs 400 per share. They also maintain a buy on Tata Motors. They value the India business at Rs 186 per share, and they do value the JLR business at slightly over 200, just 215 rupees per share. They've gone ahead and hiked the EPS estimates by 4% over FY22-23. Higher EPS estimates is driven by higher volumes and also better margins in the India business. Tata Motors has also indicated that the commodity inflation could be a challenge during first half of FY22. However, they do state that price hikes as well as the overall operating leverage improvement, which is going to be driven by sharp volume growth, is likely to offset the higher commodity price inflation. So overall, very positive takeaways coming in from Tata Motors. In fact, the stock has risen considerably in the last few weeks, but to keep a watch out on the stock, there is a lot of turnaround happening in Tata Motors.